for GI development programs.
Oh no, the float's low. Or no, there's no volume, damn it. I jumped in too fast on this one. Positive data. Shit. 27 million share float. That's kind of high. Shit, it says 36 million. Fucking trading view.
Wow, this is a first on Fast Money. Unprecedented.
Can you answer the question?
You stall
You
it.
can pass the ball.
No, I'm thinking
All right.
China. Yeah, absolutely. Well, I still think it's undervalued. I think valuations are so compelling. I mean, you mentioned KWIP. Throw up a KWIP chart over the last 6 years or so, and you'll see. Yeah, we've had a bearish to bullish reversal, but we're nowhere near where we were at its peak. Not suggesting we're getting there, but you look at these U.S. tech names. Most of them at least, we talk about extended valuations. These stocks have been they've been in the penalty box for quite some time. They're just getting out now, and valuation is still compelling. So Chinese stocks, no.
We see a Chinese government very supportive of its own tech industry at this point, as opposed to back when we were wondering what happened to Jack Ma. I mean, it's a very different environment for some of these homegrown companies.
However, the valuation has changed a lot, especially, I mean, even the last month, the valuation has changed enormously. So I think a few weeks ago, we looked at Alibaba taking out the cash, which is very substantial. It traded about 16, 17 times earnings. It's now 23, 4.
Okay.
And Amazon is maybe 33, 4. So I get that at the moment, these companies are seen as the darlings, right? And in the AI race, China wants to have absolutely, right, great entrance. And Alibaba, of course, would be one of them. However, there is still, all the things that we go to the U.S. for, right? Exceptionalism, rule of law. Some of those things have been a little bit battered, but nonetheless, they're still there. So to me, the way I'm set up, I like Alibaba. I have FX on KWeb, but I do still think, given the run that they've had, that I would rather be in U.S. than China.
Right. The rule of law I get, but in terms of exceptionalism, we're setting up in a world where there seems to be two parallel universes going on when it comes to technology. An AI for the Western world and an AI for the rest of the world. And so in that environment, does exceptionalism apply, or are we sort of thinking, in this other AI world outside the United States, China and Asia in particular, is Alibaba the way to go? And is that valuation gap, does that not address the fact that it might be the Amazon of that AI world?
Right. I would stick with Alibaba's been a tremendous performer. I think it's in Guy's acronym, so he's blown the cover off. It is, right?
True.
It is in two.
It's an A in yours, it's a B in mine. That's how we play the game.
So that one has had an incredible run. But you also have, to Karen's point, you also have trade. So the deadline for China-U.S. trade is November 11th, a huge wild card. These stocks have already run to a large extent into that or with a hopeful outcome. So for the next 6 months, if that trade deadline is not met and it doesn't look great, these stocks can retrace. Valuation, Alibaba, extended. JD, not. Baidu, not. So it depends on where you go. You got to be selective. I wouldn't be buying.
Why are the other two not extended?
Because I think Alibaba has been the way to play AI, and the others, although they have AI, it's not a major tailwind as far as the investor so far. But Baidu, that's your autonomous drive. That is the reason why I have Lyft over Uber, because Lyft can rise a lot more. They're partnering with Baidu, but so is Uber. So we have two